All right, let's dive into a really pivotal moment in India's corporate history. We're talking about the huge review of employee stock option plans. This was a real turning point that completely reshaped how companies share their success with the people actually building it. It pretty much laid the groundwork for the startup boom we're seeing today.
I mean, think about that question. It's powerful, right? What if you owned a piece of the company you worked for? That single idea is what fueled the rise of employee stock options, or ESOPs. It was a revolutionary concept, but, well, by the early 2000s, it was pretty clear the original rules were showing their age. They were really struggling to keep up with how fast the economy was changing.
So, to really get why these changes were such a big deal, you gotta look at the timeline. The first guidelines dropped back in 1999, but the market just took off so quickly that just 3 years later, it was obvious the whole system needed a serious overhaul.
Okay, so here's how we're going to break this all down. First, we'll talk about that initial excitement, the ESOP gold rush. Then we'll look at the problems that started popping up, the cracks in the system. After that, we'll get into the really tricky question of what an option is even worth. Then we'll see how the rules got a much-needed update for startups, and finally, we'll cover the new focus on making sure employees knew their rights.
So let's start with that initial gold rush. ESOPs were being talked about like they were the future of everything, the ultimate way to pay people. But the reality on the ground, well, that turned out to be a whole lot more complicated than anybody expected.
Yeah, the market had just completely outgrown the rulebook. Companies were looking for clarity, investors were demanding transparency, and, employees really needed some protection. So, in response, this committee, led by Professor Varma, was put together to modernize the whole framework and create a system that was actually fair for everyone.
But before they could start proposing solutions, the committee first had to really understand the problems. So they dug into this huge nationwide survey that gave them a real-world snapshot of how ESOPs were actually being used and, in some cases, how they were being misused.
Now, this is where it gets really interesting. The survey found this massive divide. Over in the tech world, ESOPs were being used just like they were supposed to be, to motivate and keep talented people at all levels of the company. But in a lot of the non-IT companies, they were basically being used like a bonus and only for the top brass. A totally different philosophy.
The survey basically laid it all out. The system was a mess. There was no consistency for big events like mergers, unlisted startups were hitting huge roadblocks trying to go public, and there was a serious lack of proper reporting. Almost nobody was getting their plans certified by an auditor. It was clear things had to change.
And that brings us to one of the biggest challenges of all, the accounting. How do you figure out the true cost of these options to the company and their actual value to the employee? The old ways of doing it were just way too simple. It was basically guesswork.
So to fix this, the committee came in with a totally new way of thinking. They pushed for something called fair value. This concept went way beyond simple math. It meant using these complex financial models to figure out what an option would truly be worth if you could trade it on the open market.
And this table just shows the difference so perfectly. The old way, intrinsic value, was super basic. It just looked at the stock price on a single day. But the new fair value approach, it uses these complex models to factor in all kinds of things, like time and how much the stock price might swing around. It's literally like comparing a simple ruler to a high-precision laser measuring tool. The most famous model for this is called the Black-Scholes model, and you can just think of it like a recipe. To get the fair value, you need these 5 key ingredients. You combine the stock's price, its expected volatility, how long the option will last, any dividends, and the risk-free interest rate. It's a much more accurate way of getting to the true cost. Now, these new accounting rules were a huge piece of the puzzle, but they weren't the whole story. The committee also proposed major changes to help India's booming startup scene, which was really being held back by the old regulations. Okay, imagine this. You're one of the first employees at a startup. You work like crazy, the company finally goes public, it's the dream, right? But then you find out you can't actually sell your shares for a whole year. By then, who knows what the price will be? This was a massive roadblock that made startup ESOPs way less attractive. So the committee recommended this really clean 4-step process to fix it. Get shareholder approval, put everything out in the open in the IPO documents, get pre-approval from the exchanges, and this is the big one, get rid of that frustrating 1-year lock-in for regular employees. This was an absolute game changer for startups. Maybe the most important part of this whole review was the focus on the employee. The committee realized that an option is totally useless if the person holding it doesn't really understand its value, its risks, and what their rights are.
So to deal with this, they said companies had to provide a simplified disclosure document. It had to clearly explain these 4 critical risks so that employees can make a genuinely informed decision. It's not just about giving someone a lottery ticket, it's about making sure they know what they're getting into.
So when you look at the whole picture, these recommendations weren't just small tweaks, they were fundamental steps toward building a corporate system that was more robust, more transparent, and more fair. A system where employees could really be treated like partners in the company's journey.
The reforms from the Varma Committee were a giant leap forward for sure. They directly enabled the kind of wealth creation that we now see in India's startup boom. But it still leaves us with a really important question to think about. In today's world, are stock options still the best way to align everyone's goals with the long-term success of the companies they build? It's something to consider.